Hello guys, this is a pre-market analysis of 27th of May. So let's see what all are the developments and yesterday's price action and what is going to be our plan for today. And it's a sensex expiry also. So see, global markets are still reacting mainly to that US-Iran conflict developments and the price of oil movement, right? If you see yesterday at some point, oil price was spiking. I'll tell you that development also, and then the market was coming down. And previous week, what we have seen is oil price was crashing and the market was continuously going up. And we have seen rupee weakness also in the last week, but last 3 days rupee is strengthening because of RBI's currency swap measure and the Strait of Hormuz shipping activity that is getting improved also. And what we have seen yesterday and what we are going to see today also can be related to expiry related positioning because this is going to be monthly expiry. So if you see compared to the previous sessions, considerably the global cues remain relatively stable. Yesterday, this issue was there, some kind of escalation, and that is why market have came down. And if you look at European market when opened, even DAX also like 180, 170, 190 points down. And then we got that down move towards the end. That also could be related to expiry positioning because I wanted, in fact, everyone wanted expiry to be 24,000 plus or minus 100. If you remember, in the pre-market yesterday, we discussed the same thing. It is going to be 24,000 plus 100 or minus 100. So what they did, 24,000 around that open and then went to 24,100. So that, okay, fine. And that level got defended, came to 23,900, defended that level and gave a close of 23,933. So it is still within that range that we have discussed. And that fall is looking bigger because after 100-point up move, it have came down. If it was coming down from 24,000, coming to 23,930, it's not a big deal, right? So let me show you what happened yesterday, and then we will discuss a further development. So guys, we have the live market mentoring program where we trade live and we teach in the live market. So if you are interested, you can get in touch with us. So here what happened is yesterday opened here around this pivot and S3 level, got an up move till R3, made a dip that is very much normal and expected at that level. Then again, they tried to break, but it completely failed. Liquidity sweep and many breakout traders got trapped. And that's why I tell you not to chase breakouts, unnecessarily. Let's wait for a pullback, and if the pullback is satisfying, then you can look for it if you want a breakout trade. Otherwise, if they are going from here, let it go. The chances are very less, and winning probability is also very less, and the risk is also very high. Why I need to take such kind of unnecessary, chasing of breakouts? So it got failed, and many got trapped, and completely market reversed. So it was a clear trap. Otherwise, they don't want to break this high, right? This high is taken out and then it reversed completely, but still you got a 900 level defended and 933 is where the close is. So 24,000 plus 100 minus 100, that's exactly what we discussed in pre-market analysis. Exactly the same happened. Good trading opportunities were there. If you remember, I have posted a put trade that I have taken around this area, this 20 MA trade. I have already posted this trade also. Now today I will post this trade. There are multiple trades that we have taken during the session, all these one by one. I'll post for the learning purpose. Now coming to the pre-market, so what we are looking for today is important range. Let me show you once again. Yesterday's high and yesterday's low. So this is a very important range, 23,900 and 24,100. I don't think that they're going to cross 24,000 today because there are again microeconomic and macroeconomic issues when it comes to India that I'll be discussing. So it can be a small gap down. And then if this low is breaking, then the window is opened firstly to fill this gap. So that is around 700 level. And in that case, they can also move towards these levels also, right? So these lows also they can go, but immediate window that is opening in case if there is a gap down, and if it is going below yesterday's low, going below 23,900, straight away 23,800, and then this gap fill. So this is what we are actually looking for. But let's see if again something positive is coming. Everything is looking at the global headlines. So then there can be a sideways market because again, sensex expiry. So expiry game will be there. So see, yesterday, by the time Indian market is opening, US military have sank two Iranian boats in the sea. And US have told that or stated that those boats were allegedly trying to place sea mines and the sea mines in Strait of Hormuz. Already there were sea mines and the discussions are going on to remove the sea mines and make the Strait of Hormuz open and allow the vessels to pass through. So US allegation is that these Iranian boats were placing sea mines and they sank those ships or the boats. as a retaliation, what Iran did is Iran fired missile towards a US drone and a US fighter jet. So that news have surfaced, and that could be the reason why the market have came down. Oil price was also spiking up, and European market was also showing that negativity once they have opened. So if you see for the last 2 weeks, the global markets have rallied, and the last 1 week, our market also did a very good up move, right? Crores that 24,000, which is very good, and oil prices have sharply corrected, and it came to 92 also. But at that point of time, market were expecting a peace agreement between US and Iran, and that was mainly in discussion, right? But this, escalation, this missile exchanges between both the sides have unnecessarily created some uncertainty with that expectation, and that could be the reason. Even US Secretary of State Marco Rubio also said that the deal with Iran, it can take few more days, and that again increased uncertainty, that everyone was expecting tomorrow it can happen, even during market hours it can happen, and we are prepared for such kind of moves. But nothing is happening, it's just getting delayed, and such kind of escalation is also coming. So market reacted to that. Oil price have fallen, increased. The one which has fallen is increased, and market have also came down. But mainly it was an expiry play. So whether this will happen or not, e- even nothing would have happened, but still the market would have stayed yesterday 24,100 to 23,900 range. That was the best scenario for the option sellers, and that the way the market have played out yesterday. So oil price have increased around 3-4% compared to Monday level. So even when now I'm discussing this, oil is again increased to the similar level. So definitely Indian market have closed negative yesterday. Asian markets also mostly negative. European markets, I told you, DAX at one point was 180, 200 point down, but again it is showing weak. US markets remained resilient yesterday, and the main reason is the optimism again, which is continuing on the future agreement. And another impact, or the reason why US market have stayed resilient, is the semiconductor related strength is what now you see in US market. So if you look at now, there is a positivity that the Strait of Hormuz activity, if you see, US Navy is quietly assisting the ships through the Strait of Hormuz to go smoothly. And if you see, uh, even when I'm talking about this, the ships are passing through the Strait of Hormuz normally. Almost 40 ships has been passed through the Strait of Hormuz in the last 24 hours. So on a normal day before the conflict started, it's around 60 ships per day. So it's almost 40 ships, which means 2/3 is now. It is things are looking normal. At some point, even not even one ship is going through. So six instead of 60, which is usual, now 40 is going through, means the scenario have completely changed, right? Even if you see just 1 week ago, 2-3 ships, that too like Indian flag, Chinese ships, etc., is what with special permission, toll and other things is what they used to allow. Even 1 month back, nothing was allowed. So this now indicating that the ground level, that shipping conditions are actually improving, and energy crisis possibilities actually coming down. That's good for the market. And if you look at US closing data, Dow Jones slightly negative 0.2. That's the main pressure from United Health, and S&P positive around 0.6%. Nasdaq outperformed and it's 1.2%. That's because of the semiconductor strength. And VIX also slightly increased 2.5%, and it's around 17. Now, overall, if you look at the global market, the broader US market momentum that still remain positive despite all these negative cues which we have seen yesterday in Asian markets and European market. US market have remained stable, and the global cues are, if you see otherwise, other Asian, apart from US, Asian markets and European markets, and this escalation tension, it looks slightly negative. Now, GIFT Nifty, uh, just 1 minute. GIFT Nifty is indicating some kind of 50-point gap down opening. So it's a first session after the monthly expiry. So it's around 890. So around, see, if it is not exactly, no, it's if it is 890. Now the thing is that Nifty closed at 913. So Nifty closed at 930. Normally, when 1 month is there to expire, now we are in a fresh expiry series, right? So at least 100, 120 point futures premium should be day before yesterday. One day went to expire 70 was their premium because of bullishness. But when 1 month is there, bullish or bearish, at least still 100 points should be there. So if you give 100 point, it should be somewhere around. Uh, if Nifty is, if Nifty is equal to the spot, it has to be 23,930 plus 100 point. That should be 24,030 or 50, something like that. But instead, it is showing 23,900, which means around 130, 150 points short, right? So we are looking for, if you equate it with GIFT Nifty, we are looking for something like 130, 150, maybe 100 to 130 point gap down, right? So let's see after that what is going to happen, whether they're going to fill that gap which you got yesterday, big gap up and up rally. I think that up move that you got towards the end, that is completely covered. Now the gap is yet to cover. Let's see if there is any escalation, any news is coming, that will also be covered, right? So there is nothing more to discuss. Yeah, but I have the confusion whether this is expiry close also, that I'm not sure whether GIFT Nifty is showing yesterday's expiry close. In that case, it's expiry. So if they are also starting from today as fresh, not sure about the date. In that case, there will be 20, 30 point gap down only. So anyway, leave that. We don't want to predict whether it is gap down or gap up or what point gap down and all. We get anyway, 7 minutes before, and accordingly we can plan also. So today I have this confusion as whether that is expiry point, that premium that they're showing, or it's a fresh one. If it is fresh one, it is going to be a gap down of 130 point. Otherwise, it could be a gap down of 20, 30 points. So yeah, let's see what happened. Yeah, again, rupee weakness, again a major concern. And rupee moved from 95.5 yesterday to 96.4. RBI dollar swap auction was there. RBI conducted for 5 billion USD INR swap auction, and that auction subscribed for nearly 2 times. That is indicating further demand of USD. 9.8 billion has been subscribed. So Indian clients are they are demanding large amount of US dollars, and banks are, despite this, see why RBI is doing it is to pump liquidity, pump dollars, so that the demand for dollar will come down. If you inject $5 billion, but it's oversubscribed, means showing even more demand, whatever you are giving, it is sucked out. So that's a strong pressure on rupee, and it's heavily oversubscribing the RBI auction. That is indicating that the dollar for demand is unlimited, and it keep going up. Whatever you so some measure has to be very much necessary. This 5 billion auctions and all, it is not going to work out, it looks like. Again, yesterday, FIIs are turned out to be net sellers, 2,400 crore. 3 days they bought, but they turned out to be sellers. But still, selling volume has come down. DIIs bought around 1,400 crore. So net institutional inflows around 1,000 crore. And if you look at the open interest, it was expiry. So call up index futures 24% unwound. And call option, if you see, 47% unwound. Put options 53% unwound. And put call ratio actually dropped from 1.21 to 1.06. And if you look at the participant wise positioning, FIIs are, FIIs, again, if you see their bullish positions, whatever was there, it is unwound. Prop traders' bullish positions have reduced, and retailers' more bearish positions unwound compared to the bullish position. So that means clients, the retailer stance remains still strongly bullish as usual. Again, both FIIs and prop traders are currently holding heavy negative position even now. So that again raises the possibility of a strong short covering sentiment. If something positive come, it can be a strong short covering, right? And if the negativity is there, more shorts can be added also. So the global cues not significantly negative. Yes, yesterday this was there, right? It kind of mixed to weak. And Indian local cues also, if you take, it's again mixed to weak. Rupees weakening, this gap down indication, weak local sentiment, monsoon issues there, fertilizer prices are increasing. That's again an important issue. So tomorrow Indian market is holiday, so we may have a volatile market today, because no one want to see. Firstly, it is a sensex expiry. Secondly, no one want to carry a position tomorrow. It's an overnight exposure. No one want to in this unnecessary scenario. So I don't think that people prefer to carry for tomorrow. So there can be adjustments and there can be bigger movements. So please be very careful. The positives are US market is resilient, Strait of Hormuz functioning, scenarios improving. Semiconductor is showing strength in US, which have nothing to do with India. Possibility of FIIs short covering is there if there is a good news. But for that, we need to wait for that. And global momentum is not deeply negative, it is slightly negative. Negatives, US-Iran missile exchange yesterday, there is a possibility of escalation. Oil prices again bouncing, rebound to 3-4%. Rupee weakened again sharply from 95 to 96 after the auction. And Gift Nifty, not sure, it's slightly negative. Institutions are net sellers, if you see, that's again a negative. And profit booking is what we are seeing at 24,000 level. So these are the main things that you need to work upon and trade responsibly, trade carefully. See you. Thank you. And sensex expiry, be very careful. Avoid unnecessary exposure. If you're a seller, close your positions by 2 o'clock. If you're a buyer, you get a lot of good opportunities and try to capitalize on that. So see you guys.